The United States has been facing an affordable housing crisis, but now home builders are saying that tariffs could be making it worse. Take a look. The National Association of Home Builders recently put out a report where they said about 8% of the materials and goods used to construct a new home are imported from outside of the country, including Canadian lumber, including Mexican refrigerators. Well, the Trump administration has put a 25% tariff on goods coming into the country from Canada and Mexico. Meaning, if you are a home builder and you are importing your lumber, you are importing your refrigerators, you will now be subject to an additional 25% tax, that's what a tariff is, on those goods that you are bringing into the country. Which means you as the builder can either A, eat up that higher cost and have a smaller profit margin, or B, pass that cost down to the consumer, which is the buyer. And buyers are already struggling paying for and affording the higher cost homes today. Now, to be fair, the 25% tariff on lumber, softwood lumber specifically, is on a 30-day pause, but is expected to go back on in the first week of April. And this could then potentially drive up the cost of building houses because builders could be paying more money to build those houses. Now, you might say, Jaspreet, isn't all this theory? I mean, tariffs are still so new. We don't know what the real impact is going to be. Not to mention the softwood lumber tariff is currently paused, and you are 100% right. But we do have some new data showing the impact of the tariffs already. I'll show you. In February 2025, we got a report saying single-family housing starts in the United States hit a 12-month high. This is according to the Department of Housing and Urban Development, which means builders started building a lot more houses in February, which is a good thing if you're thinking about buying a home, because if there's more inventory of homes available for sale, well, then you have a little bit more bargaining power as a buyer, because if you don't like that house, you can buy that house. But then things started to change. Obviously, between February and March, we started to hear more announcements of tariffs, more uncertainty because of tariffs. And then on March 17th, we got a new report which said home builder confidence in March fell to a 7-month low. Here's what the National Association of Home Builders said. Quote, builders continue to face elevated building materials costs that are exacerbated by tariffs, as well as other supply side challenges that include labor shortages and other shortages. Why does this matter? Because home builders choose to build a neighborhood or build a subdivision based off of their own confidence. Because remember, if I am an investor or I'm a home builder and I want to go out and build a property, this isn't a 2-day transaction. This is a multi-month or multi-year transaction. So when I'm thinking about building the subdivision, I have to think about what is the economy going to look like 12 months to 24 months from now, and kind of project whether it's worthwhile my investment to do so. And when you see home builder confidence fall like we have just seen happen, that can change their trajectory of how many new subdivisions that they actually decide to build, how many new properties, how many new single family homes, how many new apartments that they actually build. Because if a home builder is not confident in making a profit, they're not going to want to actually build, because these builders are doing it for profit. They're not doing it for charity. Now, this is something that we've been covering in Market Briefs. Again, Market Briefs is my free financial newsletter where every day my team is publishing what's happening in things like the housing market, the stock market, the economy, the crypto market, and the global economy into a fun and witty and easy to read newsletter. We have hundreds of thousands of investors that are reading Market Briefs every day. So if you have not joined Market Briefs yet, I got the link for you to join for free down in the description below. Now, you might say, well, what's the big deal? Builders will pass the price down. Isn't that gonna be just like everything else? And sure, maybe they will, but the problem is housing prices are still hitting new record highs, even as mortgage rates continue to stay at around 7%. The 30-year mortgage rate is still at around 7%, which means it is getting more expensive for people to buy homes still. And if you wanted to go out and buy the median house today, to kind of put this in perspective, versus 5 years ago, not only is the median house today about 50% more dollars than what it was pre-pandemic, the second problem is mortgage rates are higher today than what they were pre-pandemic as well. That means not only do you have to borrow 50% more dollars, but you're also paying a higher interest rate to borrow those dollars. So you're borrowing 50% more dollars, but your actual mortgage payment, assuming you're buying a house with a mortgage, is many times 100% more today than it was just 5 years ago. I recently put out a video where I did this calculation to actually do it for you. While over those same 5 years, the median household income in America is expected to have risen by around 20%. This number is not confirmed yet, but it's expected to be around 20%. So the average household in America is making 20% more money. The median house costs 50% more dollars, but the median mortgage payment now for that same house is about 100% more than what it cost 5 years ago. You can start to see how it is becoming more difficult for people to go out and buy a house. And this all comes back, I said this before, but all roads ultimately lead back to real estate economics 101, which is supply and demand. The price of a house ultimately depends on supply and demand. When there are more houses for sale than there are buyers, now you can see the prices of housing fall. Because when there's a lot of houses for sale, sellers are competing against each other. How do sellers compete against each other? Through price. They offer price discounts, they offer concessions. When you have more buyers than sellers, more demand than supply, now the buyers have to compete against each other. How do buyers compete against each other? Through price, this time through bidding wars. Now buyers will be offering more dollars because there's a limited supply of homes and a lot of buyers that want this home, which then pushes home prices higher. And what we've been seeing is inventory has been going up over the last few years. It has steadily been rising. Builders have been building more homes, but now home builders are potentially taking a step back as home builder confidence starts to fall. And it comes at an interesting time because, of course, in February, we saw a lot of builders start to build more homes. Part of the reason for this is we were coming out of the winter months. Part of the reason for this, where builders were feeling a lot more confident in the economy. Part of the reason for this, where builders were feeling confident that people are going to want to buy more homes. But then, right around 1 month later, builder confidence begins to fall drastically. And that could impact future construction, future starts, because builders will ultimately want to build houses if they're confident that they're going to be able to make a profit. But if builders are concerned about potentially a recession or being able to source materials or being able to sell the house, they're not going to want to build a house because, again, they want to make money. And that's why all of this matters. Now, again, there's a lot of changes happening in the housing market, and housing is also very localized because we're seeing some neighborhoods around the country, for example, Austin, which is already seeing home prices fall, versus other areas like the Midwest, where home prices are still growing relatively fast. A number of studies have now said that cities around the Midwest, like Detroit, are seeing some of the fastest housing price growth across the country. Well, this is where, again, real estate is very localized. What's happening in your area might be different than somewhere else because the Manhattan housing market is different than the Los Angeles housing market. It's very different than the Detroit housing market. But at the end of the day, what you want to understand now, if you are thinking about buying a house, is your house that you're living in is something that you're buying to make memories, not something that you buy to make money. This goes against a lot of conventional wisdom out there when it comes to housing, because a lot of people and financial advisors will talk about how your home is the best investment that you're ever going to make. Well, if you've ever bought a home before, you know that buying a house can feel like a money pit because you got to pay the mortgage, you got to pay the insurance, you got to pay the property taxes, you got to pay for the maintenance, you got to pay for the upgrades, you got to pay for all the stuff that goes into home ownership, and you don't actually make any money unless you can sell it for a profit. And then when you sell it for a profit, well, you no longer have that house. And even if you pay off the mortgage, you still have to pay for the insurance and the property taxes and all of the maintenance and upgrades as well. Not to mention that if you do have a mortgage, the first few years of the mortgage are pretty much just interest payments. I mean, banks are smart. The way that they do mortgages is they front load mortgages. That means the first half of your mortgage term, so if you have a 30-year mortgage, the first half of it generally is primarily interest payments. So you're not paying half interest, half principal. It's primarily interest in the beginning part of your mortgage. As you get deeper in your term, now you start to pay a little bit more principal with each payment that you make. But if you refinance, which a lot of people do, your process starts all over again. This is where you got to understand the game. The way you build wealth is not by owning the house that you live in. I'm not saying it's bad to own your house. Hear me carefully. The way you build wealth is by owning investments. Your house, I don't want you to treat your house like an investment. Now, I get it. I'm just a random guy on YouTube. Investing has risks. You're never guaranteed to make money when you invest. Talk to a financial advisor. But if you want my opinion, treat your house like a liability. When you treat your house like a liability, the one that you live in, whether you own or rent, same concept. Now what you're doing is you're reframing your mind the way you think about how you actually build wealth, because now you realize that the way you build wealth is not by making a mortgage payment, it's by investing your money. Maybe you invest your money in rental properties, because now when you own a rental property, you still have to pay for the property taxes, you still have to pay for the insurance, you still have to pay for the maintenance, you still have to pay for the upgrades, but you have an income coming in from that property to pay for those expenses. It's the tenant's rent that's paying for those expenses. Versus when it's your house, it's your income that has to pay for those expenses. So you have to keep working to pay for those expenses. And you might say, well, what if, I just rely on my retirement income to pay for those expenses and I budget for them? Okay, well, what if your property value goes up? Now your property taxes go up, your insurance goes up. And this is where you got to, again, think of your house like a liability. It is good to own a house. It's good to own your house free and clear. It's a very good thing. It can help reduce a lot of your stress, but that's not how you're going to really become wealthy. The way you actually become wealthy, for me, is when I have enough cash flow coming in from my investments, whether it's my stock dividends, whether it's my business profits that I don't have to work for, whether it's my real estate rental income, when I have enough money coming in from my investments that I don't have to work for, now I am truly financially free. But that's not going to happen from my house. That's why I always say, treat your house like a liability. You're buying your house that you live in to make memories. You're buying your investments to actually build wealth. When you have that sort of frame of mind, you're going to have a very different scenario and question as to whether you can afford your house. That's why I say when you want to afford your house, you have to afford the down payment, you have to afford the mortgage payment, and you have to be able to afford the move-in costs. At the very least, for me, if I want to afford the down payment, that means I got to have at least 20% down. I know it's not easy. I know banks say it's okay to have 3 or 4 or 5% down, but if you really want to have some skin in the game, 20% down. If you want to afford the mortgage payment, that means you can pay the mortgage payment, you can pay your groceries, you have money to spend, you have money to pay all your bills, and you still have money to save, and you still have money to invest after paying all that. And then being able to afford the move-in costs is understanding that when you buy a house, you might want to make some renovations. You might want to finish the basement, and you might want to buy some new furniture. Budget for that before you move in, because if you don't, well, your wife or husband might say, hey, we got to do all these things, and you don't have the money to afford it because you just bought the house, and you don't want to go into debt to do that. Buying a house is expensive, but it's not the only way to build wealth. In fact, it's not the best way to build wealth. It's nice to own a house. It's nice to own a house free and clear. But it's even better to have assets that are paying for all of your expenses every single month. And the way that you do that is by investing your money, not just paying down your mortgage. Again, it's not bad to own your house. It's not bad to do that, but it's even better to focus on the investments. And with that, I'll see you on YouTube tomorrow.